Assalamualaikum. Today we are going to talk about interest rate and the role of central bank, which is falls under topic 2. For your information, this chapter we divided into two parts. One part is about the interest rate and the second part is about the role of a central bank. Okay, for interest rate, you are going to learn what is the interest rate, the definition of interest rate, and what are the differences in between nominal interest rate and also real interest rate. And the last but not least is the determinants of the interest rate of factors that influence the interest rate. What is interest rate actually? Interest rate is a return on a capital price of money. For the borrower, it's a cost of borrowing, but for the lender, it's the amount of funds received when they extend the credit. Means the nominal is after the real interest rate you plus with the inflation. But when we talk about real not including the inflation. It reflects the true cost of borrowing. Okay. The second point is the inflation. What is the inflation? As when the inflation rate is expected to increase, the household who have excess of funds may reduce savings to make more purchases before the prices increase. They dwindle their possibility to make a savings because they want to do more consumptions in buying of products and services. So that's why definitely the household need more funds in their hands, more cash in their hands, and they are willing to borrow more funds in order to purchase more products before the prices increases. So when the inflation rate high, so the government will foresee these things, they definitely will increase the level of the interest rate in order to control the inflation rate. And the fourth point is the budget deficit. Budget deficit. What budget deficit means? Budget deficit means when the government expenditure more than the government revenues. When the government expenditure more than government revenues means we have a lot of cash outflows instead of cash inflows. So definitely the government need a lot of funds. So they are demanding for more loans from the commercial banks. So when they have a high demand for loan from the government, the commercial bank will increase the interest rate level. Okay. And the last point is the foreign flows of funds. What is mean? For example, our foreign direct investment, why we call it as a foreign direct investment, when the international investors interested to invest here in Malaysia, to invest in our domestic market. So there is due to the massive flows of funds by large investors to our market, definitely the commercial banks or the government will see this is an opportunity to increase the level of interest rate. Okay, now I would like to explain what is actually the interbank rates, the overnight policy rate, the reference rate, which is the base rate, and also the lending rate. Just like what you see here, why it called as a short-term period, because short-term period is less than a year. That's why you see here is within 1 week, 1 month, 3 months, 6 months, or 12 months. You see the movement of the interbank rate. The shorter the period is much cheaper compared to longer the period. For example, 1 week, the interbank rate only 3.26 fees, but after a month it will be the 3.28. Okay, the comparison between these, the June 2015, for 1 week the interbank rate is a 3.25, but if they go for a 1 month it will be the 3.28, but after 3 months it will be a 3.67. The longer the period, the higher the interbank rates will be. Okay, the overnight policy rate is quite different with the interbank rate, because interbank rate we are talking about the short-term period. It's starting from 1 week, 1 month, 1 week, 1 month, 3 months, 6 months, up to 12 months. But overnight policy, it's only overnight. Yeah, that's why if you can see, the OPR is much cheaper compared to the interbank rate. So just like this, the OPR is interest rate in which a depository institution lends immediately available funds overnight. OPR is determined by Bank Negara Malaysia in the Monetary Policy Committee meeting held throughout the year. So now we go for a reference rate. Reference rate. Okay, what is reference rate? Reference rate is an interest rate benchmark which is used to set other interest rate. For example, before 2 January 2015, for a lending rate, we call it a base lending rate. But starting from 2 January 2015, there is no more base lending rate. We call as a base rate. What it means by lock-in period? Uh, Lock-in period means um, you can liquidate or you can pay off the loan earlier than the schedule. There is no restriction. There is no lock-in. You have you will not give any constraint to settle it or to pay off between the settlement date. But if the loan offer stated the lock-in period, means you have a restriction or you're not allowed to pay off the loan early than scheduled. Why it's happened? Because the commercial bank want to generate a certain minimum return on the sum advance that to cover the lender's lending and the loan administration expense. So guys, how you get the effective lending rate? How you get this one? Because we stated here the loan interest rate is a BR minus 1%, right? So for you to get the effective lending rate, you take the 6.6, you minus with 1, so you will get 5.6%. Okay, Alhamdulillah, we go to a second part of this chapter 2, which is we talk about the role of Bank Negara Malaysia. This is we talk about the objective, the functions, and also the monetary instruments. Okay, just like I posted in our Telegram group, I urge you guys to see this very useful, very good YouTube from Bank Negara Malaysia. Don't forget to view this YouTube link, yeah. Why monetary stability is so important? Because if inflation is too high, yeah, it will bring a deficit to our economy. Our purchasing power is shrinking, our currency value also drop. Yeah, there is a lot of bad impact to our economy. The second objective of the Bank Negara Malaysia is definitely act as a bankers and a financial advisor to the government. That's what the Bank Negara Malaysia has done during the COVID-19, where the Bank Negara Malaysia uh, yeah, agreed with the government or advised the government to implement the moratorium for the loaned customer. And the third objective of the Bank Negara Malaysia is to issue the currency and also to keep reserves safeguarding the value of the currency. And for your informations, the reserve for Malaysia are in a form of a gold, yeah, a reserve position in the IMF and special drawing rights and all kind of portfolio. For example, the international currencies in form of bank balances, the T-bills, and also the long-term securities. Other than that, the objective of Bank Negara Malaysia, they also influence the credit situations to the advantage of the country and also act as a banker to another banks. And Bank Negara Malaysia is the last resort for the bank, for other bank to make a borrowing when the interbank or among the commercial banks or among the financial institutions don't have enough money. So they will go to Bank Negara as a last resort to make a borrowing. So rather than that, Bank Negara Malaysia also prudent conduct of monetary policy by maintaining a low and stable inflation and to preserve the purchasing power of ringgit Malaysia value. Apart from that, the Bank Negara Malaysia also ensure stability in financial system and also develop the financial system infrastructure, and also to promote the financial inclusion, banker to other banks, the government, and also provide advice to government on the macroeconomic policies and public debt management. So what are the monetary instruments that are used by Bank Negara Malaysia in promoting their functions and objective, and to make sure our Malaysia always have a very sustained economy, a very stable environment? First thing foremost is using the statutory reserve requirement. What it means, all banks are required to place a certain amount of cash reserve with the Bank Negara Malaysia to maintain the situation, to maintain the reserve, because in the event that all the commercial banks or all the financial institutions have a financial distress, they can use the reserve, or our government can use this reserve to balance up the financial distress or to balance up the economy. Rather than that, the second monetary instruments that used by Negara Malaysia is also called as a discount rate. What is the discount rate? Discount rate is the rate of interest by Negara Malaysia charged on loans to the financial institutions. So the third instruments that used by Bank Negara Malaysia is the open market operations. What is open market operations? It's by sales and purchase of the government securities that affects the bank reserve flow of a credit and a money. And papers eligible to be traded are, for example, Jagamas bonds, Bank Negara Malaysia bills. Yeah. So the fourth monetary instruments that used by Bank Negara Malaysia is the interest rates that involve the setting minimum lending rate to the banks and ceiling interest rate that can be offered to depositors, while the minimum lending rate to the banks, because we want to encourage more lending capability among the market, and also why put up a ceilings interest rate that can be offered to depositors, because we want to encourage more savers or more deposit amount in the market and keep influencing a level of savings. And the fifth point is a moral situations by doing the induce a positive voluntary response from the financial system to BNM policy initiative. Okay, I just want to show with you, this is a set of Bank Negara Malaysia as at March 2018. What it means a reserve that located in Bank Negara Malaysia. If you can see the portion for the green color, it represents a gold and a forex and other reserve, and its majority of our reserve is consists from the gold and also a forex. Rather than that, we also have a deposit of financial institutions, loan and advances, deferred expenditure, other assets, bill discounted, and also Malaysian government papers. The last slide, the previous slide, we talk about the asset, which is the reserve, and this slide, we talk about liabilities of Bank Negara Malaysia. You can see these peach color 53.57 liabilities of Bank Negara Malaysia is consumed for a deposit to a commercial banks and finance companies and also a merchant banks, and also followed by a currency in a circulations, and we also have a Bank Negara bills. We also have a location of a special drawing rights, and last but not least, we also have a deposit to the federal governments. Okay, now we talk about reserve for Bank Negara Malaysia and components and its currency safeguarding rule. Why we need a reserve? It's very important for us to have a reserve. Same like us as an individual, as a personal, we need to have a reserve. For example, we need to have emergency funds. For what? For us to use when we have a financial distress, when we need to handle a systematic risk that we cannot control, seem like our country, seem like our government, we need to have some reserve of Bank Negara Malaysia. So what actually the roles of reserve? What is actually the role of reserve? Roles of reserve is to support and maintain confidence in the policies of monetary. They also provide level of confidence to the market in order to meet its external obligations, its external expenses. They also demonstrate a backing of the domestic currency by using the external assets. They also assist the government in meeting its forex needs and external debt obligations, and maintain a reserve for national disasters or emergencies. So if you can see here, this is actually the real figure reserve of Bank Negara Malaysia that I took from Bank Negara Malaysia website as at 22nd of March 2018. When you see here, our majority of our reserve consists of a foreign currency reserve amounting to 97.4 billion USD, followed by other reserve asset, which is a 3 billion, and followed by gold 1.5 billion, and STR 1.2 billion, and the last but not least is from IMF reserve position, which is at 0.8. It is sufficient to finance 7.3 months of written imports and is 1.1 times the short-term external VAT. Okay, till then we finish the topic number 2. At the end of the chapter, you are able to differentiate what is the interest rate, what is the reference rate, what is the OPR, what is the base rate, and you also able to know the role of Bank Negara Malaysia, and what is the objective, what is the functions, and what are the reserves that consist in the Bank Negara Malaysia. I really hope that you guys stay at home, stay healthy, and stay happy. Thank you.